Delta and its indicators. In trading and in finance, delta can mean more things. In options, obviously, delta is measuring how price of the option changed in relation to the underlying asset. When it comes to futures, delta is difference between finalized executions at the bid and the offers, which are basically the market orders. So I'm sure you will hear term delta more times in trading, so don't get too confused with that. But we will focus on delta in trading futures. So delta, like I said, is difference between finalized executions at bid and the offers. These are the market orders. Delta is either positive or negative. The positive delta means that there are more aggressive buyers. The negative delta means there are more aggressive sellers. In any healthy move in any market, delta should be supported. The price should be supported by delta. So what it means, if price goes up, you want to see the positive delta. If price goes down, you want to see the negative delta. We are going to take a look at these candles here. These are footprints, but which I will be covering in the next one, but we still can kind of see things here. You can see there are 4 bars, and delta for each bar is represented in below it. Okay, this is one sort of a representation of delta overall for each candle. Another thing is that there is a delta for each price. Okay, imagine this asset is trading at different price points, which this can be like $10. Let's say this is some altcoin, which this is a $10, $9, 8, 7, 6. we cannot go to the negatives, but these are just different basically price points. For each of these price points, you have a delta here on the left. How this is calculated? This is actually a little bit confusing, because when you have a depth of market, you have buyers are on the left and sellers are on the right. Okay, if you remember this from a section about the DOM. When it comes to the footprint, the sellers are on the left and buyers are on the right. It's the exact opposite. Why this is a thing? Well, it's because when you have a buyer here and you have some seller above him, when the seller is actually going to sell, he is going to hit the bid. Okay, he's this is the seller, this is the buyer, this is the depth of market. The seller is hitting the bid, which means it's shown here. When the buyer is going to buy, he is going to lift the offer, which is shown here. Okay, so I hope this makes sense. This is a little bit of a tricky thing because they are opposite, but how this number is then calculated is you need to put a minus before every of these numbers, and then plus between them. So you are going minus 12 plus 21, that's positive 9 of delta. Minus 720 plus 221 is minus 499. Okay, so this is how delta for each price is calculated. It's the difference between the selling and buying, okay, at each prices. The single bar delta is shows us the delta for each bar on the chart. We look where the most trading also happened, which is a good indicator of potential strength and weakness. We can spot a single bar delta divergence. So the single bar delta divergence, as I already mentioned, delta for each price is down here. The delta divergence basically happens when you have a positive delta on a down bar. Okay, another example of it would be you have a negative delta on a up bar. Okay, what is kind of a more important thing to look at is where the trading is happening. if you remember correctly, this is from the failed swing video. This is the move on a Bitcoin, which was on that high relative volume where I told you how market moved past the level of resistance but just failed from there. As you can see, if you take a look inside the candle, if you look where the most buying happened, you can see it's happening all the way at the top, and right after the candle closes there is no follow through. So all these buyers get stuck and the market will sell lower from there. On the pullbacks, you can also see how, you know, a lot of volume, a lot of buying, a lot of delta. You know, there is a 1000 delta in this small bar, which is just a few tick bar basically has 1000 delta. You know, all the buying is coming in. There is a no response for that. Market is continue down. Cumulative volume delta plots a indicator that shows the finalized executions at the bid and the offer. In healthy trends, cumulative volume delta and prices should go hand in hand. Like I said, you know, when markets go down, cumulative volume delta should also go down. When markets go up, cumulative volume delta should also go up. Once there is a imbalance between them, this is time for you to pay attention. Divergences can happen, and they can show us when there is absorption or exhaustion in the market. Cumulative volume delta is a good indicator to use for both trend following and mean reversion. What I'm going to say here as well is that this is an indicator for day trading. Okay, if you are because basically you are taking advantage of something that is immediately happen within couple of minutes, you know, the same trading session and so on. If you will plot this over more, you know, over a couple of days, it can get confusing. Sometimes it can be useful on, you know, when, for example, if you plot, if there is any sort of a obvious resistance, for example, where your price, you know, did something like this on, let's say this is a Monday, there is a Tuesday, there is a Wednesday, market did nothing on Wednesday, and then you will make a double top, but your cumulative volume delta will look something like this. You know, you will see that this kind of a divergence, that a lot of buying is coming in at the same price point. That can be actually useful, and you might think how useful this is, but what if let me draw this again. What if this is about to happen? You have a same kind of a 3-day range. Okay, market goes up on Monday, does really not much on Wednesday, and then, you know, makes the equal high on Wednesday, so Monday, Tuesday, Wednesday, and your CVD does something like this. Even, you know, and exceed these. There is a peak here and there is a peak here. A lot of people will come to tell you that there is this obvious absorption here, you know, of the buyers. You know, market hit the resistance, but, you know, the cumulative delta is much higher. What they fail to understand is that on Wednesday there was a large amount of selling that was basically wasn't shown on the chart, because on Tuesday nothing really happened. So, but on the CVD there is this large amount of selling to the downside. So people who were selling the whole day on Tuesday are just covering their short positions. So this is actually bullish. So even though market makes this kind of a return to prior resistance and delta is much higher, a lot of people will be missing this kind of a middle point that happened on Tuesday. So this is why in span of more days this is not the best idea to do, but for intraday this is obviously great tool. So we have a couple of examples of cumulative volume delta. This is a intraday chart. I think these are once again some bonds, but it's the same in every market. Market is going down. In here, market is going down. The cumulative volume delta is at this low right here. is making a higher low. This is the signal of exhaustion. The aggressive sellers that were, pushing this market down are not willing to sell anymore, basically. Sorry, it's here, obviously. On the new low, the market, the aggressive sellers are not willing to, put the same amount of aggression anymore. Market will reverse that because market simply runs out of the sellers. Kind of the same situation here. Market makes a higher high, delta is making a lower high. The aggressive buyers are not willing to buy anymore, okay? And since you need kind of a both market orders and limit orders to sustain any sort of a healthy trend, market will just pull back and sell from there. These are the better ones. The exhaustion can be kind of a tricky to trade sometimes because you will be lacking that any sort of a confirmation or confluence on the footprint charts. But when it comes to absorption, these are really a cleaner ones. Markets are making a lower high here, okay, so trend is already kind of turning, but you will make this higher high in cumulative volume delta. This means that in this move to the upside, the aggressive buyers are really stepping in. You will see that on your footprint where there will be huge buy orders executed in these candles, but market is not responding. There is a limit pressure inside here which will then drive the markets down. And after something like this happens, you are getting into the trades on a once again simple price action. You will have any sort of a cluster created here that essentially broke the structure, and you are just kind of playing this absorption that happened. Okay, another one, and this is my favorite one personally. This is a cumulative volume delta divergence in trend. This doesn't happen that often, but obviously there is a established trend for a day. Market is just going up, and on a pullback into once again this level of cluster, you will have a lower low on a delta. This means that sellers are trying to really step in, move this market lower, but you have your level where you want to be trading, and they will very shortly start to have, market will basically bounce from there, and they will just start to covering. And you can see on this example how the delta is just drifting lower on any sort of pullback. It's just kind of a moving lower. They are really trying to sell this thing, but it just kind of keeps going higher and higher. So these were the two examples of cumulative volume delta. Let's make it a quick recap because I know this can be kind of a confusing. So first one is going to be let me just do it like this. So the first one is the absorption, when you have a price and you have your CVD. What did I just did? You have price and CVD. The price then makes a, let me just kind of do it like this. The price makes a lower high, the CVD makes a higher high. This is this means that buyers are getting absorbed, and the price makes a higher low, and the CVD makes a lower low. Okay, so market is the sellers are getting absorbed here basically. Let me just quickly think about if this is a correct one, but yeah, obviously the higher low market bounced from any sort of levels, but the sellers are still trying to push it, although market is already going up. Market is making a reversal, buyers are still trying to push that one up. Okay, so this is a form of a absorption, and then we have a exhaustion, which is where basically should I type it? Yeah, let me just type that real quick. This thing is not okay. Hope you can see that. It's much smaller than the rest of these things. But yeah, the price makes a higher high. The CVD is making a lower high. Okay, market makes a new high, but there are no buyers. Buyers are losing basically the interest. Markets make a lower low. The CVD makes a higher low. Okay, there are no sellers interested in pushing this thing lower, and since you need both sides to kind of go hand in hand to sustain any healthy trends, you know, these things will not every time reverse, but it's a good spot to pay an attention. And like I said, in the pullbacks, these are extremely the best, because if you think about that, when there is a established trend, because obviously when you are playing a mean reversion, it's there is some underlying move already happening. But if you are in an established trend, and especially if these trends are sort of kind of a aggressive ones, people will decide that they are on the wrong side really quickly, and they will just start puking their positions, and that will, you know, that can really drive markets much higher. Okay, delta on y-axis chart. This is the last use of a delta, which plots the delta on y-axis on a volume profile. I know we haven't covered this yet, so I will try to keep it simple, but basically for each price that gets traded, you will see the delta on the side. This is on a footprint chart, and this is on a volume profile as well. There are more options how you can display these things. This is a good thing to use because, for example, market is going to hit some sort of a low point, and you can see how at the lows there is this large amount of selling going on. You know, you can also see it in a blueprint. You know, obviously the red color displays a larger selling, but even if you look at this simple kind of a y-axis profile that's showing you this kind of a red coloring, you know, it's a signal of there are sellers here who are trying to move this market lower, but it's not just simply happening, and market will briefly after that reverse to the upside. Same thing here, you know, this is the day, this day ended here. Look at this huge buy profile here, and you know, inside of this area as well. Once we get below it, you can, you know, make sure that all these buyers that were aggressive inside this area here will start puking their positions, and market will, you know, move based on that to the downside. Okay, so this was delta. It's not a complicated thing. These cumulative volume deltas can take a little bit of time to spot, but it's same as any other oscillator you might be used to, which just show you divergences. You just need to understand what these divergences mean, and you know, delta itself for a bar is pretty much straightforward. I think I covered that, you know, enough, and we are just about to jump into footprint charts, where I will, you know, kind of finish the talk about it.